Good morning, good evening, good afternoon. Therefore, I've kind of hopefully covered all the time zones that are being represented here today. My name is Michael Filighera. I am with LogicalSignals.com and TradersHelpingTraders.com. And I am joined today by my colleague, Sascha Goehring. And together we are moderating, running, building our trade room. And so the theme today, of course, is for the whole webinar or the whole series is Elliott wave and Fibonacci. And I've done several of these, and I've always talked about Fibonacci being still my favorite indicator, and how Elliott wave also is still one of my favorite go-to. Just a little bit of history on myself. I picked up Elliott wave about after 10 years after I started trading. I started trading in 1979 as an options market maker. And I have traded here in San Francisco. I've traded in London Traded Options Market, the European Options Exchange in Amsterdam, and the DTB in Germany, which was my first introduction to all electronic trading. I came back to the United States in 1997, went back down to the Pacific Exchange, and then I decided that everything was slowing down because everything was going electronic. And so I set up in my home, in my office, and I started to continue to trade options for a while. But in 2013, I decided that I really had enough with volatility, and I wasn't understanding or just enjoying the overnight volatility that was happening. So what I decided to do was become a day trader. And that meant I just going to focus on the futures market. And so my focus initially was the NASDAQ and the S&P. And so I've added other things since then because I follow many markets. But the S&P and the NASDAQ, and now more really fine-tuned, the NASDAQ 100 is our main focus within our trade room. And so what I want to talk about today is how can reduce Elliott from the big, massive picture on a monthly maximum chart. And I will show you that. So here on the NASDAQ, so you can see that on the NASDAQ, because it's really not that old, I have data that goes back to 1999. But I can go out to the Dow Jones, and I have data that goes back to, let me just get rid of that. My data goes back to 1902. 1902, not 2002, it's 1902. And so that's a lot of data. And so you can build an Elliott picture, which I have here, and then, but what good does that, trying to trade off of your monthly maximum chart, when you're really trading on a 15-minute screen? So what we want to talk about today is how you can take Elliott and you can reduce it down to a time frame that you're using and understand that it still works. So let me just tell you a little bit about Elliott wave. I'm sure many of you already know because you're here. But Elliott wave, in my view, is a series of building blocks. And so one builds up to the next degree, the next degree, and the next degree, until finally you're at the top line, which is grand supercycle. Now, you can continue to break this down, understanding that they are building blocks. So when you get 5 down, 3 up, you know that you're most likely going to get an additional 5 down. And so understanding Elliott and how it functions and how it builds, of course, then you just start reducing that. So just for the sake of what we want to display today, I am going to start on the hourly chart, and we're looking at the NASDAQ. And so again, I want to talk about how Elliott is constructed. And so we have impulse, and then we have corrective. Impulse waves are 1, 2, 3, 4, 5. Corrective waves are labeled ABC. And then there's rules and there's regs that kind of go in all of those. And so the beauty of Elliott, in my view, is that there aren't that many rules. So if you know the rules, you memorize the rules, you don't break the rules, you're likely going to be on the road to successfully using this tool, this indicator, to your advantage. Now, what really, I find a super benefit to using Elliott and Fibonacci is that when we get into areas of new lows where we've never been before, which is pretty difficult, right, in our market, because we really can go back and find, longer term lows. But it's when you are going into new all-time highs. That's uncharted territory, as I call it. And that is where the use of Fibonacci shines like a star. Now, I want to add at this point as well, is that because we are totally quantitative, everything is quantitative, which means it's computer-based, it's algorithmically based. And so therefore, when we look at this and we think about it, that because everything is algorithmically controlled or programmed, that there are many, many algorithms that have all the Fibonacci sequences programmed in. So when we are starting to move to new all-time highs, as we just did and we continue to do, and both Sasha and I and our counts do also suggest we have more all-time highs to reach before we get to a level where we get a much larger corrective phase. But when we're getting into those new all-time highs, it becomes more advantageous. I'm just going to go out to my 4-hour chart, which I can basically show what I got going on. This one goes back to March of this year up until today. And just quickly reviewing what we have is, well, let me go out a couple more. Let me go out here. This one shows it all. This is a 3-year weekly chart. So once we got above that high in the NASDAQ, we got above 16,767. We were in new all-time highs. And Matt, yes. Well, hi, Mariah. Well, the whole webinar is on Elliott Wave, and but here we were moving into new all-time highs, and by using Fibonacci, track and find where we could find additional highs to complete all of our waves. And so I am going to really discuss the basic of the Elliott, and then I'm going to bring it down to how we use it in our day-to-day analysis, in our short term. And just so that you know, our trading screens, for the most part, I have a 5-minute, a 2-minute, and a 15-minute chart. And that's what I work off when we're day trading. So big picture is what I'll formulate first. And big picture is what I talk about on, I do present a daily update on YouTube. And then I also do a weekly update. So it's on that weekly update, I'll review my long-term view or my long-term count for the NASDAQ and for the S&P and for other markets as well. But here we are in the process of a primary fourth wave. Now, primary degree, that's pretty big. It's a pretty big degree to go on. And we've been in this primary fifth wave since October of 2022. So we've already been in getting close to 2 years. And I don't think it's going to be finished by the end of October. I don't think that we'll be done with this particular, not definitely done by this primary degree. So within it, it's going to have 5 waves of intermediate degree. That's what will form that primary fifth. And then we just start breaking it down from there. So what's going to be inside? So right now we're inside of an intermediate third wave. What's inside that intermediate third wave? 5 waves of minor degree. So now you're going to start to get this building block concept. So we're inside, we have 5 waves of minor degree, of which we've only completed 1, 2, 3, and we're still inside 4. So after minor wave 4 is complete, we have a minor wave 5 to new all-time highs. That will then complete intermediate wave 3. We come back down in an intermediate fourth wave. And then once that's complete, we go back up in an intermediate fifth wave again to new all-time highs. And that will then complete the primary fifth wave. Then we have what sits on top of that in our view, and I believe Sasha and I both share the same view, is that what sits on top of all that is a cycle degree third wave. So then we have a cycle degree fourth wave. So it seems like, what we're always constantly doing is that we're rallying, we correct, we rally, we connect. But it depends on what degree as to the size of the rally or the decline. So basic premise. So where we are, I'm going to bring it down, back down to, let's just go to the daily chart. And you can see, here we are sitting within this minor fourth wave. And that's the color I use for minor, is that kind of orangey color. Now, Elliott taught us and continues, we use that the fourth wave will find its terminus within the price territory down to the terminal point, the end point of the fourth wave of one lesser degree. So for how we count, let me just say that I'm going to start with a minuet. So I got a minuet, which is the purple ones. Then you have a minute, which is the kind of whitish colored ones. And then you have minor, which is the orange. And then you have intermediate, which I label in yellow, and you can see it. I have to go back out to that weekly chart. Intermediate, and then on top of that, you have primary. On top of that, you have, and I can show it. I just got to go all the way back out to my maximum cycle. So NASDAQ newer index. So I'm not really going above cycle because, in my opinion, it's not been around that long. It's like when we go to super cycle, which you can do in the Dow and the S&P because you have over 100 years of data. So those waves, you build them out and they become that large. But the NASDAQ really came into existence I think in the beginning of the 80s, but really as an index did not form and the future didn't come, I think, until later, much later, did the NASDAQ future come into play. So hence why we're not dealing with larger than cycle degree here. So let me bring it back down here. Well, excuse me, because I keep forgetting how much time we go past. So here we are, still within this minor four. Now I'm going to build up to where I'm going to bring Sascha in, because this has basically been our focus right here. We're just really focusing on this because we're fairly satisfied with this did complete a minor third wave, and that we remain within the minor fourth wave. So as this happened and we started to drop down, we got this very strong ABC down. And technically, what's inside of a corrective wave? It's an ABC structure. But here's the difference. Impulse waves come in one form, 1, 2, 3, 4, 5. Whether they're impulsing up or down, it's still 5 waves. And within that, wave 2 corrects wave 1. Wave 4 corrects wave 3. And then once you've completed the 5th wave, then the whole sequence corrects in an ABC. Now that's the whole building blocks theory. So we're sitting inside of a minor fourth wave. What's going to be inside of that are 3 waves of minute degree labeled ABC. Now, when this one played out, it came down, it reached the end point. It got inside this box, it reached the low. In fact, it exceeded it a little bit. And so the reality was, but it only, to be honest with you, it only took that. This was July 11th and this was August 5th. That's less than a month. And so Sascha and I had a discussion, I'm like, well, I can call it minor wave 4. Why? Because it came down in an ABC. It reached the first level. The most common fib level for correction is 0.382. And it came within and hit the low of the 4th wave of 1 lesser degree. So I thought, okay, I have to run 2 counts here because there is the possibility that it was a 4, and what we're going to launch higher in is a minor 5th wave, which will take us to new highs. So basically, we had to run the 2 counts side by side. But Sascha brought up an excellent point. And I'm going to go a few more minutes and then I'm going to turn it over to him, because what Sascha was going to introduce, maybe many of you already are very, very familiar with it, but it's the Fibonacci time cycles, or I call them the Fibonacci time fractals. And those fractals are very, very important because they hold on. Okay, I'm being asked regarding the intraday and using yesterday's Fibonacci high levels. How do we proceed to today? Why is Elliott wave primarily shown in your charts already completed? Well, Mariah, because it is. When it's a complete, I put the wave count down. If it's not, it's still in progress. So that would be that answer. Yes, we will, Matt, we'll go over that. We'll go over that for you. Moving on. So Sascha brought to the conversation that when we are really using the Fibonacci time cycles and we're putting them together, you're making a comparison very similar to when we're using Fibonacci within our wave count. And say, for example, we're counting a 5-wave structure, either direction makes no difference, that there are Fibonacci relationships between the first wave and the fifth wave, between the second wave and the fourth wave, and so on. So we have, and actually there are Fibonacci relationships between the first wave and the third wave, so that you can start to gauge what extent these markets can get to within that time, well, not within the time, but within that structure. So that's where the benefit of using Fibonacci and using it correctly. But let me just say, Fibonacci and Elliott do go together and they work pretty cleanly. But Fibonacci as a standalone indicator is very, very effective, because there are a lot of Fibonacci levels. And again, when I turn this over to Sascha, he is going to bring that into our conversation. So there are a lot of levels, like basically for Elliott, you have 0.236, 0.382, 0.5, 0.618, 0.786, 1. Then you have, now if you don't understand the Fibonacci sequence, it's taking 0, 1, then you add those together, that's 1, then you add 1 and 1, that's 2, 2 and 1 is 3, 3 and 2 is 5, and so on. And you can go on to infinity. And then what Fibonacci also realized is that there is a relationship between the two numbers. For example, 0.382, 0.618, those, and it repeats and it repeats and it repeats. The other thing about Fibonacci, which I think a lot of people don't want to accept or realize, Fibonacci is everywhere. Elliott actually called Fibonacci the law of nature. And you can find it in the human body. We are constructed with under a Fibonacci numbers, and if we, 5 senses, 5 fingers, 5 toes, 3 joints down to, if we go for the shoulder, the elbow, the wrist, how many joints you have in your finger, how many joints you got in your thumb, it all fits a Fibonacci sequence. So it is kind of the law of nature. And whether we want to believe that we are under that law or not, well, that's where we have problems. So I think that it's like, to me, it was like much easier just to accept it. Yeah, it is the law of nature. You can look at it and find it. So even within plants, you can look at cauliflower, look at broccoli. Those are perfect Fibonacci sequences being formed in nature. So it does become very interesting, but understand that these numbers repeat and you can chart them. So, but there are many other Fibonacci relationships, and Sascha will mention those that go outside of the ones that I just mentioned that we use pretty stringently within Elliott. So just moving along. So we came down to this conversation. And as I said to our members in the trade room, and I said to everyone who listens to my daily updates, it's a conversation, not an argument. It's a conversation that cannot be ignored because we're constantly striving that we're trying to find a system that is going to follow through, that we can rely on, that we can trust in terms of, are we at a low right there? Are we at that low, or are we going to build on that low? So in other words, are we going to have an A, a B, and then a C wave? So we have one more leg down versus just going straight up and making ourselves to new highs. So what do? Well, what I chose to do and what Sascha chose to do is that we have running concurrently side by side two counts. Now, a lot of people say, well, that's wishy-washy. That's make up your mind. Is it going to go up? Is it going to go down? And it's like, really? Do you think you can walk in every day and you can say, yeah, market's going to go up, market's going to go down? And what happens when it doesn't do what you think it's going to do? Do you call yourself stupid? Do you realize, oh, you were wrong? No. And so when we're presenting, and this is something else that Elliott really laid out pretty cleanly for students of Elliott, as you're working through, have two things. You have a preferred count and an alternate count. And it isn't necessarily how you are looking at the market and saying, this is my preferred count, because that's the one that we believe has the highest probability of coming through. But there are points on the chart that you will figure out via Fibonacci, via the Elliott count that you have in place, where your current count would become invalidated. Then what is it? Well, that's why you have an alternate count. So it's not necessarily being wishy-washy. But I'm now going to show you how we break this down and we put it on a 15-minute chart and lower. So what I want to I just kind of go, okay. So there's a lot of people that would just, silly questions. Okay, so what I want to do, Sascha, are you ready that you can go ahead and share your screen?
I'm here. Yes, sure. I'm here. Yes.
Okay, I'm going to stop my share, and now you can put up your chart. And then what I want to do is what Sascha and I are going to talk about now is how we now break this down and we use Elliott on a 15-minute screen.
Yes.
Now, the larger count will kind of be there, but you're not going to see this clearly because remember what I said, Elliott is building blocks.
Yes.
So you can count 1, 2, 3, 4, 5 ABC, 1, 2, 3, 4, 5, and then you either done an ABC, but of what? So you go up to your next chart. Oh, that's just an A wave, or that's just a B wave, and so you know what comes next. And so again, the purpose of what we wanted to talk about today is how Elliott wave is very functional and really does work on an intraday basis and for day trading. So,
Okay.
Sascha.
Yes, hi everybody, also from my side, and greetings from Germany. I'm here in almost dark and cold weather already at 7:30. Yes, a little bit of myself. I'm 40 years old now, and I was trading a lot. Before I stepped into the futures market, I was trading a lot of cryptos and different style of trading, which I'm doing now. So when I met Michael, he brought me into day trading because back the days you were not able to trade the crypto market as you can do like today with ETFs or whatever you can do with them. That was just holding, hoping to get money, follow your Elliott rules, and hopefully be happy at the day of the end. And Michael brought me into this. I think it's now 3 years ago. Michael brought me into this day trading futures market, and honestly, how we met was a little bit funny. I was stepped over his YouTube videos he's doing every day, and I found that very interesting how he's implementing his Elliott waves into the futures market. And I got interested and I contacted Michael, and since then we became friends and doing a lot of work together now. And yes, regarding the technical stuff which Michael already presented is very nice job, Michael. Thanks for that already. And
Welcome.
I can just add one thing, and that's also maybe a little bit regarding the comments that I read here. Elliott Wave is a guideline of trading. It presents you a guideline or a market behavior which you can take profit of. Okay, it's not every time the right count which you are using, but therefore you always have to have alternate counts in your head or in your brain which you can use and work off. So intraday trading, when you start trading and you say, "Hey, good morning, I will go trading now. The markets are open," and you maybe start 1 hour before the market opens and look through the market, and you define waves and you feel how the market behaves at this point. You can take a lot of advantage of that because you see Fibonacci levels, also working with Fibonacci, you see how the market moves, and you try to implement that on your day trading. Okay, so that's not that we say, okay, we have to have this count, and you are married to the one count, you trade like it, and you get slapped in the face from the market. Sorry for my words, but I'm German and I don't know every exact English word, but you know hopefully what I mean. So you always have to be open for the nature of Elliott Wave, how the market behaves, how the market trades, what it tells you. The market tells you something. The market tells you, for example, you go over one Fibonacci level, you have confirmation that the market normally in a healthy market structure is not allowed to pass that retracement level, for example. And when it's retracing or when it's expanding that retracement level, you know that the market tells you that it want to go higher. And you can participate in these moves whenever you get the signals of Elliott. So that's only one thing I want to add here to make a little bit more technical content about how you can take advantage of Elliott. The count, like the higher degree counting, what Michael also was talking about, is not also always that easy because the market is changing a lot. Also, intraday is changing a lot. So whenever we see valid counting possibilities, we throw them up until we got invalidation. Okay, that's a very, very important sentence in Elliott. Until you don't have invalidation of your actual count, you don't have to change it. Okay, only when you feel the market doesn't run after your primary count, for example, you think about what could it be. Okay, and then you see probabilities of possible market movements, and that's what we try to take advantage of. Okay, and that's just the side note here. What I've read in the comments. I hope this makes it a little bit clearer for you. So Elliott is a very, very helpful tool, and also in combination with Fibonacci. It doesn't matter how you do intraday trading. I also trade from different signals in the market. I'm writing a lot of indicators on my own. I write algorithms also, which I can use for trading. But the total picture of the market movements and combining it with Elliott is a very, very helpful tool to get you, or how you say, how to make your trading better, okay, or to make your trading much more reliable and also much more comfortable because you know what the market will do, okay, and that's a very good benefit of using Algo. So sorry, maybe I have also put a lot of two words here now out, but that was on my heart, which I had to tell you. And yes, and how do I start, Michael? What shall I talk about? Yes, okay, I know. Give me a second. I go on the 1 hour chart. So that decline Michael was talking about. So the sequence here, this decline here, okay? This, in my view, compared, and this is also a very, very important part of understanding Elliott, it's an art and it's a market behavior where you have your own view of the market, and it's like you recognize patterns, you recognize Elliott, for example, corrective waves that have a behavior together, like wave two or wave fours. Wave twos, for example, are normally always shorter than wave fours in a correction. Okay, so the timeline wave four correction in an ABC structure does normally take more time than a wave two correction, for example. Okay, so wave two and four are the corrective waves in an impulse. Okay, and we know that we are in an impulse in this move up. And that's why I came up uh, with a point which I was talking with Michael, that I'm not very sure. Okay, so I have to tell you, I'm not very sure how to label this move up. Okay, at the moment, and the question is only when I compare, for example, this move here. Okay, that's a clear WXY pattern. Okay, it's a clear three-wave move. Okay, so this is a W, and this is an X, and this is a Y wave. Okay, because in the Y wave you always have three waves. Okay, so and I compare it to that sell-off we had here, and I say, Michael, in total, yes, you can count that as an ABC, which I've labeled as an ABC, but is it the completion point of our wave four? Okay, so I came up with this opportunity or with this point that I have to compare wave sequences compare wave sequences together. Okay, and that told me here, it's just a feeling, it was a gut feeling of which I had, and I said, normally when we are in a wave four correction, that wave four correction has to take more time, or minimally the same time as this correction did here. Okay, and therefore Michael and we ran two counts side by side, and I was having that count that that our wave four is not done here. Okay, so I run the highest probability in my view at the moment that wave A of four and wave B of four have finished, and we are at the moment declining in the C wave. Okay, so that tells me at the moment I have a high probability that the market will take this low sooner or later. Okay,
Yeah,
don't get me wrong, it's not, I don't have a crystal ball. Okay, it's, you can also count it differently, because you can say possibly that's an ABC for wave one and we have our wave two pullback here. But, and that's also the part I was talking about before, it's very interesting because whenever you're using Fibonacci, you see that the retracement, which is the yellow 61.8 at 18,378.75, at the moment is holding. So that is the 61.8 retracement of that complete move up, okay? And I tell you, to be honest, this move here is no impulse for me, okay? It would be rather an ABC for wave A in a diagonal pattern, okay? So that would be the only possibility for me as a trader to count this move up as the first as the first move up, okay, for the first impulse, not impulse, but the first diagonal up. So that would be my wave one. So now, as long as we are holding, and this as Michael also talked about in his updates, as long as we are holding the 61.8 retracement level, okay, that's a part for me to always have in mind, that the market can turn higher here, okay? I will bring it down to the 50-minute chart and tell you what I mean in a second. It is possible that the possible low for wave two is in here, and the market then
right.
upside, okay? And that is the beauty of Elliott and understanding market movements. Always always be prepared for possibilities or for alternate scenarios that the market will tell you, okay? You cannot force the market, you will always lose, okay? So therefore, always try to prepare yourself for alternate possibilities how the market will move, okay? It can be the next hour, it can be the next week, it could be the next month, depends on the degree you're counting. But for me, it's also very, very important, and this gives me a lot of confirmation and relaxation also for trading these markets, okay? Because at the moment, you see, it's very, very ugly. Whatever is coming down here,
Yeah,
it's really,
I
and
know.
we have an election this year in the US, which is a very, very, very big point. And I doubt there are people out there that will let the market drop, okay, so far. And therefore, it's very, very choppy. You see, we start here, and again, with the first wave diagonal pattern, okay? This is very, very rare, okay? Normally, you want a strong sell-off when you got a level rejection, okay? For starting a C wave down. Okay, starting at the moment a C wave down with the first wave diagonal pattern here. It's very, very rare. And this is also a part, it's not easy to trade the markets at the moment, but as much as you are prepared for the markets in each direction, I I doubt you will, or not I will doubt, but I hope everybody makes the money that they wanna make, and also get confirmation their trades, you know, because we all sit here because we at the end of the day we want to make money with that. Okay. And therefore, really, really be prepared for alternate scenarios in the market. Okay. And now I'm going to tell you what I also mean here. And that's a very, very nice example. Okay. So we came down, or let me just do it a little bit different. Okay. I'm going to repeat what Michael also was talking about. But we say that we have a B wave top here. Okay. And we are on a C wave down. The C wave consists normally as is an impulse. Okay. Wave one should be normally an impulse, which is the diagonal pattern. Wave two is a correction up. Okay. And then we start the third wave again with an impulse. Okay. So I'm talking now at the moment, these circle white numbers. Okay. These are my higher degree counts in this correction. I'm not talking about any degrees right now because this is also how I do it. I trade what I see, what I recognize, and after the market tells me exactly what's happening, I'm labeling that. I will label it like this. Sorry, I have to just drink this. Yes, so and therefore I try to count as much as subways possible without invalidation of Elliott rules. Okay, this is what I do when I try to label the market. Okay, do I have forbidden signals in the market like Elliott told us? Don't get me wrong; these are all guidelines. Okay, it can happen without how I say it in English. Sorry, it can happen that you have, for example, an invalidation when a wave four would cross, and I am in a wave four here right now, when, for example, the wave four would go too high to take that first wave, okay? Normally the wave four is not allowed to get in the territory of the first wave endpoint, okay? They are not allowed to cross, okay? But as I said again, we had the first wave diagonal pattern to the downside, and therefore the rules of Elliott are there, of course, but Elliott also told us in possible diagonal patterns, which I have definitely here, the wave four could possibly retrace higher, okay? But the minimum or the standard Fibonacci time Fibonacci retracement levels for wave four are here on my chart, okay? That's the 0.5 and the 0.08 and 0.8382, okay? That's the standard Fibonacci levels, okay? When, for example, we go higher and normally wave four is invalidated when we break the 61.8 retracement level, okay? And this then could give you possibilities to say, hey, what's happening here? Is something else going on, okay? You never have confirmation until we break certain levels in the market. And this is what Elliott in combination with Fibonacci tells you. So whatever is happening here, you have no real confirmation until we break the 61.8 to the upside. Okay, only there you can tell possibly that the move up is something different than a possible wave four expected by another sell-off here. Okay. So this is, I think, in my view, also very, very, very a benefit of using Elliott and Fibonacci. You really know exactly, I mean, in 99 point something percent, you always could be wrong, but it gives you a very, very good guideline. For example, now here, this move up. I was watching this while Michael was speaking, okay? I'm on the 50-minute time frame, so that means every candle here is a 50-minute time frame, okay? So every 50 minutes you get a new candle. And you see that move down here is a very interesting move, okay? It's an ABC, in my view, at the moment, because we retraced much too high for anything different here, okay? And that tells me, and also what is telling me today, and was not talking about with Michael about that, we did not touch the 38.2. So whatever's happening, the market didn't tell me at the moment that the upside is finished, okay? I'm expecting, to be honest, minimum in next move up, okay? Whatever the count is at the moment, I don't care, okay? It tells me when the move is done. I know what the count can be and how I can label it. And that's what I say. You come down here, you have a sell-off in this market, you can reach the 100% extension level compared to wave A. So that tells me wave C is equal to wave A. And then we got a rejection here, okay? and it was a strong one. But they moved down, holding a higher low here, and then retraced up to the 78.6 retracement level, possibly tells me that this whole thing was a wave A, this is a wave B, and we're coming up in a wave C to at least grab the 38.2 retracement level, okay? And that is the benefit, in my view, of using Fibonacci and Elliott, that you, as a trader, are prepared for market movements and can take the benefits out of it, okay? And to make the money that you're hoping you will do, or that you dream of, or whatever, and these probabilities in trading and taking, for example, Fibonacci levels, because when I change that one and add a little bit more here, see, I was expecting, to be honest, I was expecting the market to sell off from here, okay?
Yep.
I didn't want the market to break the 50% retracement level. And you see, after breaking the 50% retracement level, the market shoot up with a strong, strong candle, okay? That was a strong volume bar, okay? And that tells me, whenever we take the previous high, jump in and trade it. Watch the next Fibonacci level. Watch the next Fibonacci level. Because there are different Fibonacci levels the market is trading to. And also algorithmic controlled trades go definitely to different algorithmic Fibonacci retracement, okay?
They do.
Because
Yes.
they are
Yes.
very, very much programmed into algorithms. And
Yeah.
algorithms just put the orders out. They make it so fast you can't even see it. And when you try as a person, as a human being, to work with it, just trade the way just trade to the targets these algorithms are prepared to do. Don't ever trade against the market. Okay, that's very, very important for you as a trader. Do what big institutions do, okay? And this is also a different story, how they trade and how the market is moving. But regarding the Fibonacci levels here now, you can see we traded up the next Fibonacci levels. We did a gap here. The market took it 50%. Next Fibonacci level. There's so many things you can trade when you have an overview of the market and what the market will do. Your trades are probabilities. Your probabilities. You take a trade depending on your sides of your view and your signals. And whenever you have higher probabilities that you say the market goes in this direction regarding my signals and also possible volume in the market, for example, okay? So therefore I use different indicators. You're on the safe side. Never try to short anything because you think here, okay, we reached the 78.6 Fibonacci level. Never do this. I mean, it's no financial advice how you trade, but for your own safety, I just tell you, wait for your signals because there comes another point. Candlestick trading, pattern trading. There's so many things you can do intraday trading, and that was what I was talking about at the beginning. I use so many different things to trade, okay? But Elliott and Fibonacci give me the basic guidelines of my trades, okay? What is happening intraday, into 50-minute charts, what's happening in these candles, it's a whole different story. But regarding your roadmap of the market movement, I think Elliott is a very, very good and very, very, how I say it, it's a very good tool to optimize your trades. Just
Yes.
on the time frame, okay? You see impulse waves, you count correction waves. There are so many different correction types, but in basic what's going on in the market. And therefore you break it down on your trading screen and try to take advantage of this. And yeah, this is how I trade, for example. And
Can I ask, I just want to interject one thing because I think
yes,
you didn't actually mention this, but this is one of your strong suits. So what I want to just add right here, everything that we're talking about, this is what we do in the trade room. We are discussing this, we are presenting this, we are talking about this. But Sascha, if you just go back to the where it moved up past 0.382. No, don't go over there. It's right where you were. And that large bar, that large bar that kicked us all up.
Yes.
Now, this is something that Sascha brings to the trade room. When it breaks, and then it broke the high of the previous bar, that's a buy signal.
Yeah.
Now remember, we're day traders, but just look at where it came in. It went from, let's just say, 720, I'll give it the benefit of the doubt, 18,720, and it ran all the way up to 18,740
So that was
on the volume. And so when you're considering that you're going to say buy one NASDAQ future contract. It's $20 a point, $5 a tick. Well, I want to tell you right off the bat, folks, the NASDAQ future does not trade in ticks. It trades in dollars, and it'll flip and move $10. This is a 15-minute bar. We can go down and show you 2-minute bars that cover 10, 20 points in 2 minutes. And when you're trading the future, think about it. 10 points, $10 is 200, $20 is 400. And this is realistic. This is not unrealistic. Now, one other thing that I want to make sure that people understand is that, first of all, this is what we do in the trade room. This is the information that Sascha is bringing to the trade room. And it's his skill, and it's his knowledge, and it's his ability to read these candles. And we share that. And we attempt to say, I'm going long, I'm going short. We attempt, but this market moves really fast. So our best methodology is to teach you. Now, there's one more thing that I want to add. Oh, yeah, see, Sascha, we forgot to talk about the order blocks and those things. But I want to bring one thing in before we bring in the order blocks. Well, yes, I do, referee. I actually, no, there is no Elliott wave tool in Thinkorswim. I do that all by hand. But I want to talk about one thing that's really important right now, because Matt was kind of bringing it up. When we're talking, there's a lot of people that think that the JP Morgan and Goldman Sachs and these big players are in and basically manipulating the market around. It's like, no, they may seem that way. But over the course of the last 10 years, the exchanges have started coming up with hundreds, I'm going to tell you hundreds, of new trading vehicles, trading products. We have a myriad of new ETFs. We now have single name ETFs, right? Electronically traded fund that's really based on or Microsoft or Amazon or Google or Tesla. And then we have a 1 3/4 ultra long or ultra short, et cetera, et cetera, et cetera. So, and I want to tell you something, they are attracting not just millions, but billions of dollars that is being put into these ETFs. Now, on top of all that, we have all the options exchanges that jumped into it and said, okay, well, in my day, and I go back pretty far, we only had one expiration a month. That was it. Well, now we've got expirations every day in the indexes, in many of the ETFs. Then we have a Monday, Wednesday, Friday in some ETFs. Then we have the Friday expirations in most of the underlying components of our indexes. Then we have a quarterly expiration. Then we have a monthly expiration. So we've got so many different things that really does put a different spin on Elliott. And it also, which is why Sascha so brilliantly has extended the fibs. Why? Because he realized that, hey, we're using 0.786. Well, the algos decided they're going to tweak that a little bit to catch us or somebody, and they use 0.882. Now, you can take this out because it's not just 0.882, it's 1.882.
There's so many,
et cetera, et cetera. So there are a lot of different nuances that we've been adding in as the markets continue to develop and continue to build new algorithms. So when I'm thinking about what is really pushing the market, you're going to hear me talk about the flows, the capital flow, the options flow, and gamma. These are what is really controlling our market intraday now. And believe it or not, like if we just go back, Sascha, and just today when we started from the top and we did an ABC down, that actually was, and it was beautiful because I was talking to Sascha when they were starting, and I'm like, oh, Sascha, look at that. That was a magnet because we went and we looked, it's like there was an order block sitting underneath all that. So what happens is these algorithms are programmed, then they just go for it. They go for it and they get up there and they take all those orders. And then that's it, and they're done. So really what they're doing is that it has to do with the options flow and the gamma flow. When things break certain levels and there's a heavy gamma position sitting right there, long or short, it forces an adjustment. So all those traders that might be sitting there with that position and it goes flying through it, they got to react. Otherwise, they're going to get killed. So that kind of is that what, and not necessarily saying, that it's Morgan Stanley or JP Morgan that are actually doing the pushing. It's like they may be, but they're doing nothing more than just reacting to what's happening in front of them.
Yes.
So it isn't necessarily that they're triggering that break. That happens algorithmically, and it's just somebody's come in, they got enough to sell, they get the break, and here comes the algorithm going like, this is how much we need to adjust, and it goes in and just does it, whether it's buying it or selling it. And so as a day trader, man, I want to know that, because you can see it happening. And also adding on to all that, are we in a positive gamma atmosphere or a negative gamma atmosphere? And what do I translate that to? Risk on trade, risk off trade. And I explain all that. So we're taking our combined talent and our combined knowledge, and we're condensing it and we're putting it into a trade room. Now, we only trade what we feel are the most productive times of the day. And that's from the opening till, it's about an hour and a half each day. Now, in that hour and a half, I don't know, Sascha, I think today I had made close to $2,000, and I know that you were right there with me.
Yeah.
And the amount that you made today. Now,
not that it was that easy today, I tell you.
No, you're right. It wasn't that easy today. So you had to really pay attention. Exactly. And you had to be able to get in and out. So in other words, it's like, it's like, but this is what we're trying to teach people.
Yes.
And again, I'm walking in with a lot of years of trading experience. And then, like Sascha said, he and I met, I think 2 or 3 years ago.
Yeah.
And we just started working together and just started coaching, and we started learning things. And so, thank you, Matt. And so what really came out of that was, and I've told him this to his face, so don't worry, folks. I've been a long time since I've seen somebody really absorb it and actually come back with such an understanding and to move forward with such an understanding of Fibonacci and the Fibonacci time cycles and all of this. I was like, wow, let's start a trade.
And that's what, Michael, thank you.
You're very welcome. But it's the truth, I do believe in the truth. So just to and I'm going to start to wrap this up, because unfortunately we only get 55 minutes. I'm going to tell you how fast that goes. So what we're doing right now is, again, we have a trade room that we operate Monday through Friday. And we're really just there. We start at 6 a.m. Pacific time, and we finish by 8 a.m. So in that first half hour before the market opens, Sascha and I review all of our stuff and what we go, and sometimes we're pushing to get the information in there. But it's what we do. And then we basically trade from the opening. And I want to tell you that right now, there are so many times Sascha will say to the trade room, don't trade yet. Don't do it. This is too choppy. It's whatever might be going on. It's not worth trying to attempt to get in. And then I might add, yep, we can go in and trade, but you better keep it on a short leash. But I explain what a short leash means to me. Yeah. So, great. Thank you, Mike. But what I want to say is, like, as more data becomes available, we give it. Now, because this data on the flows, the option flows, the capital flows, and the gamma, that's really high level. I don't want to say high level, because a lot of people can get it, but you have to really understand it. So I talk about it after the fact on my updates, but to give it every night, it changes overnight, which is why I am now just doing it, basically updating in the morning for the trade room. So that's another advantage of coming in and trading with us in the trade room. You will get, and I'm talking about if you trade options, because I'll tell you what's really underneath: the Qs, the spiders, the diamonds, the IWM, all of them, same thing. They are under all of that. And so they also experience these big moves. So I'm going to stop for right now because there's still so much more to say. But I want to just say, Sascha, is there something that you want to add to this to kind of tie up
I
your
mean,
side?
first of all, I hope everybody did understand my English because I was a
You
little
were
bit
very
worried that.
perfect. In fact, several people commented how wonderful your English was.
Oh, thanks a lot for that. Yes, and I mean, yes, we are there. If you have questions, of course, you can write Michael or me, or we feel free to reach out to us, and we would appreciate to answer your questions, of course, also after this meeting. And if you have questions regarding the trade room or your trading style, we also do offer coaching and
Yes, we
everything. So
do.
just reach out to us, and if you have questions regarding your trading, we try to give a very personal content for you as a trader in the trade room, for example. And I hope we can help you with anything. Okay.
Great. And one last thing, Terry, we don't have free trials to the trade room, but at the moment we are running a promotion. And like I said, it goes through September the 16th at midnight. And Mary, then what you can do, the link that David just put in, right there is going to give you more information on the trade room. And then if you still have questions, you can contact me at michael@mjf1partners.com, and then I'll answer your questions. But right now we're running this promotion. I got to get this done quick because we got to get ready for the next person, which you don't want to miss. It's my friend Jody Samuels. You don't want to miss her. So we are offering a promotion. The promotion, our normal regular price is $299 a month. And right now, we are running it for $200 for the month. You come in, you check us out. Now, I do lay down the claim. My attempt, or what I attempt to do each day, is make at least $300. So I want to make the cost of the trade room every single day. And that's what I try to let people know. Come in, give us a try. If you follow either one of our trades or you follow what we're talking about, you should be able to make $300. And then and the rest after that, it's gravy. That goes into your P&L. And I am going to finish there because I know how much goes into doing these, and I always have respect David, and I want to thank you, David, for including us into this one. It was really great. And so that he has time to make the switch from us to the next person. So again, thank you everybody for listening. You've been great. Mariah, free trials do not show good faith. We have total faith in what we're doing.
Exactly.
There's too many people that
Exactly.
just want freebies. So I'm sorry, I don't necessarily agree with that. Thank you, everybody. David, thank you. I'm going to turn it back over to you.